Hello everybody, thank you for joining us for this IMRG webinar. What we're looking at today is, you guessed it folks, the coronavirus, or more accurately, the impact that the coronavirus is having on online retail. And what we've got here is our weekly update of what's gone on sales-wise, and also just a general look at performance and what other retailers are doing. So what we're kind of doing during this period is we're trying to take in as much information as we can and get that out to you through means such as this. And we hope to help you to understand what's going on. So during this incredibly sort of anxious and difficult time, you can try and work out what it is that you can do to get through it. So IMRG, and also we get a couple of experts in as well from their field to help us understand from other perspectives. So we've got Loqate and Emealige on here today, and Backlash have given us some information as well. So just to introduce who we are. My name is Andy Malcar. I'm Strategy and Insight Director at IMRG. So this is kind of what I do for a living, really, just sort of talk about stuff. You have to find your niche, and I think I've found something that I can do, which is talk. And I'm joined by my co-host Matthew.
Hello, how you doing? I am Matthew Walsh, that guy on the right-hand side. I look after all of the retailers' data and market insight reporting that IMRG do. So all of the general market figures and benchmarks that IMRG produce comes from my side of the business.
Excellent. And we've got two guests on there speaking with us today as well. So we just magically vanish, and then two other people arrive. Matthew, do you want to go first?
Yeah, thanks, Andy. So I'm on the bottom left, Matthew, on the webinar this afternoon. So I'm Global Commercial Director for Loqate, which is part of GBG. GBG is a global technology company which works with businesses in more than 70 countries to reach, identify and trust their customers. Loqate is the bit I work with. That's technology that sits on the checkout pages of about 15,000 e-commerce and retail businesses worldwide that allows consumers to enter their delivery address quickly and accurately so they get what they wanted first time.
Thanks a lot. And Lewis?
Hi everyone, I'm Lewis Besley, Business Development Manager of Emealige. So Emealige works with many different e-commerce, airlines, also banking and finance industries. And we help online retailers to better understand their customers by leveraging the behavior and the intelligence behind an email address. That means that retailers can create that frictionless customer experience to improve more genuine sales whilst preventing chargebacks.
Thank you. Matthew and Lewis will be sharing some of the stuff that they've seen so far as we go through. So there's three things we're going to look at. This is a similar sort of structure that we applied last week. If you joined us last week, we're doing these webinars every Thursday to give market updates as to what's going on. First one is to look at some questions that are rather pressing. Then we'll look at the performance and what we've tracked market-wise, and then look at some interesting approaches that people are taking, and perhaps some things that you might like to consider. First bit, just so as we're all on the same page, as it were, what IMRG does. So we're a trade association for online retail in the UK. We do all the trade body stuff that you would assume that we would do, but the thing that we're sort of best known for, really, and the stuff that we're good at, I suppose, is the data tracking. So we've got over 200 retailers that give us sales and performance metrics, and we give them benchmarks, and then we have a whole program of studies that we do around that to help you understand how you can improve certain areas right across your website. We've got all sorts of insight on that. This thing that you see in front of you is our digital dashboard that we built with clever folks at Capgemini. And what this enables us to do is put all our data in there, and then you can apply filters using that thing. I've just put a box around there. So that line there is showing you the total market growth for online sales over the past 12 months. And then you can apply these filters, so you can say, just show me retailers who are small, medium, large, or who have a turnover of this, or who are multi-channel and clothing, or whatever it is. And what we're doing during this kind of difficult period, or what we're told is going to be the kind of the peak, so between March and June, is we're opening up access to this thing. So it's usually a charge service to access, but between now and June, we will let retailers look at this for free if you give us some weekly data to help us track what's going on. We'll give you access to that thing for free for that period. And just furthermore on what we're doing, so as I say, we're a trade association. You know, just like you, we've had to massively adapt what we're kind of doing to just focus really on the coronavirus, which is all that anyone really wants to. That's the only thing that seems to matter at the moment. So we do the weekly sales tracking, as I've just mentioned. We also every week are looking at 300 websites to see what messaging they're doing, who's closed, who's not, who's got longer delivery and returns extensions and all sorts of things like that. So we'll be sharing our latest insight on that as well. We'll supplement with some additional data tracking, so we'll do sort of special customer funnels around the coronavirus and things like that. And every Thursday, as I mentioned, 2 o'clock, this is where you need to be ready to get these updates. And there'll be other webinars and stuff we do as well, as we've had to spin our physical events into virtual ones. So to get into it then, those of you that were on here last week, when we had a few important questions that we raised, and the first one looks a bit familiar, if you recall. Last week I said, can retailers continue to sell online? This time the question is more or less the same. I've just changed the old modal auxiliary there for you grammar fans out there. So the official line from the government is that while physical retail is closed except for non-essential stores, except for essential stores, online retail is still open. So you can be a non-essential product provider, and you can still trade online. And in fact, it is encouraged. Read that word there. But that, of course, because it's a slightly grey area, and because there's so much focus on this at the moment, it was the sort of construction industry that was under the spotlight last week, and now online retail has actually found itself in the spotlight because although some of your staff can work from home, maybe even the majority of them, you do have to have people in the warehouse and drivers and things like that if you're going to carry on to move these parcels around. And that now has become a bit of a pinch point because there's people that are kind of coming out in the press and saying things. And also there is the fact that because it doesn't have to get done, you know, are we kind of exposing these people unnecessarily? So it's become quite a big deal, this one. Some have actually suspended online trading, and we do a bit of an update on this each week. So when we looked at that on Friday, the 20th of March, so a week ago, last Friday, nearly 2 weeks ago, there was actually only about 2, I think, that had suspended online trading. So of the 300 that we were tracking, less than 1% had actually suspended it. Go forward a week, so last Friday, 27th of March, 6%. So I think it was about 19. And it's these ones here, incidentally, that had suspended it. So, you know, what's going to happen is the question. Are we going to see that kind of go up? Is it going to go up and then come back down again? From that list, incidentally, Naked Wines has started to resell again. They started to just sell things to their angel investors. If you're familiar with them, you can become an angel investor with them. But then looking at the site today, they've actually started to take on new customers as well. So they are kind of back up and running. I'm going to come back to that a little bit later on. And then a sort of related question to this is, do we anticipate that there's a kind of backlash going on? And here's just a few examples. This is just a few. There are more of what's been going on in the media really this week. And, you know, sorry to sort of name ASOS there. It's just it was the one that was on the BBC website, so you probably didn't miss that one. And also there's one from the Manchester Evening News where they said they had a courier, who's a sort of gig economy worker, and she was saying, you know, you should stop doing this because it's making me have to go out and do loads of work and stuff. Now, the interesting thing about these two is that both of them are by anonymous people. You know, this isn't sort of a big statement by someone. Could just be a disgruntled employee or something like that. But you can see the hunger in the media for stories like this. You know, big news, this kind of headline stuff, really. So I think what's kind of going on here is there is this big pushback, and if you're not careful, I think where retailers find themselves now is in a bit of a PR battle really about this. So should you trade online? Well, you can, and I think it's possible that you can keep it going, but I think you've got to get your warehouse staff on board with you and go beyond your normal thing that you would do. Every warehouse will have signs up saying, you know, we take safety very seriously, and here's the guidelines and all this sort of thing. I think you've got to do more than that now to ensure that those staff actually feel like they are really being protected. You know, you do have to really invest time and effort in this, because if you lose them, then they're going to get a bit cross really, and then, you know, you might be onto a real hiding. You might have to close entirely, and also the media might have a right go at you. You know, there are going to be goodies and baddies that come out of this. And it's quite important at the moment because there is this sort of community spirit, this sort of World War II, we're all in it together type thing that's coming up. You know, today we're all supposed to go outside and clap for the NHS at 8 o'clock. So, you know, if you end up on the wrong side when there's this big group of people together like that, you know, you're going to get a bit of a boot in quite possibly. There's more. Communication Workers Union, so they're sort of starting to push things out there and saying, particularly for gig economy workers, that you know, they got the equipment they need to keep themselves safe, and they're also kind of recommending. This is a recommendation, by the way. This isn't imminent, and it's not happening. It's just something that the CWU have kind of put out there, and the reason that I'm putting this up is just to say that this is, you know, it's expressive of what's kind of going on at the moment. And they're saying that delivery should be reduced to 3 days a week. As I say, not actually happening. It's just something that they're actually pushing for at the moment. And then GMB as well. So another one of those big unions, and they're sort of issuing the demands and things. So, you know, saying you should walk out if you've got concerns about this and they're not taking it seriously and things like that. So every warehouse, every retailer is going to say, this is very important to us. We absolutely take this seriously. But I think unless you take those staff with you, you're going to end up in trouble. And you're going to end up in a whole world of trouble, actually, if you don't do that. So I think you've got a very delicate balancing act that you've got to walk. And it's kind of top of the tree now, I would say, because the media are all over this at the minute. So to get into some figures, what we looked at last week, so we look at weeks, by the way, from a Sunday to Saturday. So last week, if you're on here, then you might recall that we said week commencing 15th of March, which was the week when it all started to get serious, when we all got put in our houses and schools closed and things like that. The growth was minus 2.2, so not massive fall or anything like that, fairly flat, but it was a very lopsided type of retail that was going on, and we're going to show you the split for that in a minute. But this week, or the week last week, so 22nd of March, week commencing, year-on-year growth, plus 0.6%. So again, it's pretty flat, really. But that doesn't tell you the story, really. Matthew's going to show us a bit of stuff in a minute of how that divides up between the different product categories, and it's a very interesting story that's going on there. Before we get into that, Matthew from Loqate, can I bring you in to share a bit of what you've been seeing?
Yeah, thanks, Andy. Appreciate the introduction. And I think what we're going to talk about will be very consistent with some of the research that the other Matthew is going to come on to just a little bit later. I think, if I may, just picking up on your previous comments, all of us on this call, whether presenting or listening, are all, in retail, we're all data geeks to some extent. But I'm reminded that within these trends of what's up, what's down, are tens of thousands of workers who might be our friends and family members and neighbours, and who are either furloughed, out of work, at home. So we think about them when we look at these numbers and trends, and not forgetting obviously those that are at work, the NHS and the care workers and the key workers that are just doing a phenomenal job while we crunch the data. But of course, an economy that gets back onto its feet quickly is important for everybody, particularly those key sectors. So it is important that we have a good understanding of what's going on and how we can navigate it and get through it as quickly as possible. So just looking on to what we've seen, so just a reminder, so Loqate Tech sits typically on the checkout page of an e-commerce site. So when a customer checks out, they have to enter their delivery address or the billing address, and Loqate Tech helps them to enter their address really quickly, just a few keystrokes, and ultimately create an accurate address for the use by the retailer. So we see hundreds and hundreds of millions of transactions run across our platform each and every year. So the trends that we're seeing are quite interesting, and in some cases have surprised us. I think we saw a couple of weeks back when there was this big move out of the office, out of the high street and home, that there was a massive rush to online. So we all saw that, so no great surprises there. And the traffic across our network was up to about 15%, sort of day in, day out, well, about 15%. However, there was some enormous spikes. So a week ago, last Monday, we saw traffic that was up there with the sort of volumes that we saw around Cyber Monday last year. So really unexpected, and some of our customers operating at absolute peak volumes of transactions. I think if you were here last week and looked at the data from last week, you will have seen the sectors that dropped away very quickly. So fashion, particularly, and those that picked up very quickly. So home and garden, beauty products, and things that were related to being at home, working at home, of which home electrical was obviously a key category. And we saw that mirrored across our network as you would expect. As Andy alluded to previously, there are some retailers that went all online, then have had to shut or suspend operations, and now are starting to try and reinstate operations, and we're seeing evidence of that. And I think that will obviously help to keep things moving and keep this sector supporting its customers throughout this difficult period. I know IMRG doesn't cover the grocery sector, and we do have a number of large customers in grocery. For some of those, they've seen just phenomenal increases in online traffic, up to tenfold in some cases, and are operating at absolute maximum scale, as probably as shoppers we've seen when we've gone online and unable to get a delivery slot with our favoured grocery retailer. So just absolutely massive amounts of traffic working through the online operations of large UK and international grocery retailers. So some of the other sectors that we've seen go through a very positive uptick, while others have been performing less well. Sports goods, a huge uptick. Garden equipment, we've already commented on. Pet food, it was another area that we've seen a huge uptick from our customers. Toys, maybe not surprisingly, with lots of kids at home. Alcohol, yeah, we've seen that. One of our large customers in the US is an online beer seller. Their figures are up something like 380% over last week. So there's a lot of beer being bought at home. So I think it'd be wrong to categorize any of this as being silver lining. We're in a pretty dismal place, both at a human level and also within the retail sector. But there are some interesting things happening as we go along. And hopefully for some of those retailers, there's some cause for a little bit of optimism as they run through this difficult period. I think the three things we just wanted to share by way of takeaways from our perspective. The first one is fairly, unashamedly from our perspective. Right now, when operations and delivery operations are at absolute stretch, the retailers are still operating. You do just need to get your customer's delivery address right first time. It sounds basic, but with fewer people delivering and lots more to deliver in some sectors, just get the address right. And however you choose to do that, just do that at the outset. You're going to have more efficient systems. I think secondly, unrelated to what Loqate does, we're seeing some really clever ways that online retailers particularly are keeping those bonds with their customers. I've mentioned in the slide Quiz Clothing and also Gymshark, or now known as Homeshark. They've shut down their operations, but they're still maintaining contact both on social media through their website. And I think, Andy, you've got some slides on that later on with some other examples. So I think retailers can do that if at all possible, maintain that relationship, keep the conversation going. And really that leads to the third point, which is, we are in a pretty difficult situation right now. But if we think about things as being maybe normal a month ago, we're in what we might call a new normal. I think let's all agree that what comes out of this is going to be something different altogether, a new normal. So using this time to think about how to be ready for an even greater move to digital, we're convinced that that's going to be the ongoing trend, and the opportunities that retailers can find in looking at cross-border markets, and there's plenty of technology that can help you to do that. I should have made the point, Gymshark are still trading online and keeping that discussion going. And then finally, and I know these sessions aren't commercial, but a number of organizations are finding ways to try and support the retail market. This is ours. We've partnered with What 3 Words. Why have we done that? Well, sometimes for delivery to addresses where perhaps people are quarantining or self-isolating, it could be valuable to have what we could call a non-contact delivery address. So what 3 words as a technology or as a data source, you might know 57 trillion 3x3 meter squares around the world. So if you want to select a location, perhaps at the entrance to a property or away from the front door, you can do that using Loqate Capture Plus, and then just assign that a link to your physical postal address. So there's a web address there. If you'd like to have that free of charge over the next few months, just to help your delivery operations, we'd be thrilled to support the retail sector with that initiative. And that's it. Thanks, Andy.
Yeah, thanks a lot, Matt. And just further on that point as well, we don't normally kind of allow solution providers to kind of market solutions and things like that in these webinars, but judging where we are at the moment, a lot of solution providers are rolling out services where you can use them for free for a set period, or you know, have them as a trial or something like that, sort of emergency responses. So we think it's a good idea really to help promote some of those to you. So every week we'll be getting a group of them together and just letting you know what's available and out there. The other thing that I almost universally forget to mention at the beginning of a webinar is you can ask questions as we're going through. Fire them in. There's a Q&A box on your session there, and you just need to type something into there, and we'll try and deal with as many of them as we can as we get towards the end of this. But right now, Matthew's going to take us through the latest IMRG numbers.
Excellent, thank you, Andy. So first thing I'm going to show you guys is some information around the 300 retailers that we've been monitoring their websites. As Andy said at the beginning of this webinar, every week on a Friday, IMRG are going on to 300 retailers' websites to see what they are doing in reaction to COVID-19. And we thought it would be useful to show you a little bit more detail behind what sorts of retailers they are and what they're actually up to. So the actual composition of those 300 companies, we thought it would be useful for you to see what the breakdown actually looks like. So split into the different product categories that those 300 actually sit in. So for example, electricals there is 13 companies around about the 4 or 5 o'clock mark on that pie chart. That means that there are 13 companies that just sell electricals. That's all they do. They're just an electricals retailer. Or the one next to it, footwear, that's 21 companies in our sample that sell footwear. If a company happens to sell in multiple product categories, or is perhaps a department store, they would slot into the multi-category that's around about the 10 o'clock mark on that pie chart there. So there's 25 companies in this sample that would sit into that category. So this is what the 300 retailers looks like. What we want to show you is a little update on what we showed you last week. Week 2 was the 8th to the 14th of March, and we've got some information now to show you what week 3 looked like for March. And one of the things that we're looking at when we go onto these retailers' websites is initially just to see if they've got any kind of messaging on there in relation to COVID-19, something on their site that is suggestive of what they might be up to, or what their delivery options are, or a reaction to what customers are saying. Typically, it would look something like this. So here's a company, Runners Need. What they've got there is a black banner running across kind of just below the navigation bar with information about coronavirus in relation to those guys. If you click on that, it sends you through to a link. And it was very typical for that sort of thing to then update the customers on what their delivery options had changed or what their returns policy might be. So in week 2, from our sample of 300 retailers, 116 had some kind of messaging on their site. Update that 1 week later, and that goes up to 224. So I actually think that's quite low. So what that is essentially saying is 3 out of every 4 companies that we tracked had some kind of coronavirus messaging on their website, which means 1 in every 4 didn't. And given the scale and impact of what's going on, we were quite surprised that there was still at least 1 in 4 that didn't have any kind of messaging on their site. Now, the next thing that we looked at was whether they had closed their physical stores or not. Now, I'm sure you can see where this one is going. Initially, in week 2, This was back the first half of March, before the government had imposed any kind of lockdown or stores being required to close. Fast forward 1 week into the week 3 of March, and this many had closed their stores. So the reason that is at 120 and not higher is because the split in retailers that we are tracking, it's about a 50-50 split in terms of companies that are purely online, so they don't have high street stores to close. And then there's obviously the other half of companies that do have stores to close. Within that 120, it would go higher, but there are some companies that have been exempt. They've been deemed as essential stores. Cycle shops, pharmacies, some home and garden retailers obviously have been labelled as essential, so they can remain open, hence why that hasn't gone higher. Another thing that might be useful for you to know about is whether companies are starting to say slower delivery notifications. So Andy earlier on was talking a lot about the courier side of things. Have companies announced slower deliveries? Are they acting as though it's normal? What is the market consensus? Well, first half, week 2 of March, just 19 retailers had some notification on their website to say deliveries might be slower, given the circumstance. In week 3, it had far more than doubled. So in fact, I think that's tripling, to be honest. So it is becoming a lot more common for companies to notify their customers that you are going to get a slower delivery. And lastly, about extended returns. This was something new that we only decided to start tracking as of week 3. So we don't have week 2 data to compare on this. Next week, we will be able to show you some week-on-week changes. But right now, as of week 3, there were 79 out of our 300 retailers that had extended their returns period. Generally, the messaging was quite vague, but it was along the lines of, we've extended our returns policy to allow you to return items up until the point where trading becomes normal. Once the epidemic is over, people will be allowed to then still return their items. Very few committed to a specific date when it came to actually announcing an extended returns period. And by the way, all of this data is from UK retail websites as well. We're not covering anything to do with overseas companies. So the bit I want to dig into a little bit deeper here is the messaging on the homepage. So those 224 retailers that in week 3 of March had some kind of notification on their site around what they were doing in reaction to coronavirus. What we wanted to show you was a little bit of detail around what product sectors those companies lie in. I showed you a pie chart a couple of seconds ago around what categories we're tracking. We wanted to know, was it more likely for one specific type of product category to put that sort of messaging up over others? So what you've got here now is all the product categories along the bottom, and then on the left-hand side is the percentage of retailers within our sample that had some kind of messaging on their site. And it looks like this. So for example, that is showing you, let's go with clothing. There were, I think it was about 92 retailers in our clothing sample. Just over 80% of those 92 companies had some kind of reference on their site. So hopefully you'll be able to look along the bottom there and see the product category that you sit in, and gives you a very good idea as to whether you should also perhaps put some messaging on and what your competitors might be doing as well. Clearly, it's very useful for the public to be able to know what your company is doing in reaction to this epidemic. So it's definitely something to consider. Of interesting note, actually, is the third one from the left, alcohol. So IMRG have a number of alcohol retailers in our tracker, and we've seen extraordinary levels of sales growth going on across the country. It does look as though the entire nation is going to be drunk for the foreseeable few weeks, given the amount of wine that's been purchased. But interestingly, they are the group of companies that have put up the most number of notifications on their websites. And indeed, a lot of that was actually in relation to how much capacity they were able to take. A very large proportion of the beers, wines and spirits retailers that we're monitoring and that we collect sales figures for had actually put coronavirus information up in relation to the fact that they were expecting so many orders that they just couldn't fulfill it because their warehouse, many of the staff weren't able to operate at full capacity. So that's the end of the kind of 300 companies that we were tracking. The other side of what IMRG do is we collect actual physical sales data from these retailers. They will tell us exactly how much money they've made each week on their website, and they'll split it out into different product sectors. And given the current environment, we thought it'd be very useful to share with you guys just how the market is performing. So we've got an update for you now to show exactly how the last week of March performed. So just last week. And for anybody that tuned in last week, this graph might look the same because we thought it'd be quite handy to show you a little bit of an update as to what the market has done. So down the left-hand side is the year-on-year sales growth. So that's actual revenue collected on the websites of retailers that we are having in our panel. And then we've pulled out 4 big categories: clothing, home and garden, health and beauty, and electricals. And this is what those trend lines looked like up until the midpoint in March. So you can see electricals was kind of sitting at the bottom, slowly working its way up. But if you remember, week 3 in March was at the point where the government kind of enforced a full-on lockdown. People were told that you had to work from home, high street stores were shut, pubs, clubs, cinemas, social events eliminated, ruled out. That was when we saw a big shift in the pattern of what people were buying. So for week 3, the market did this, where clothing kind of shot towards the floor, and items such as electricals and home and garden, things to keep you entertained whilst you are working from home, did really rather well. So the big question became, what would the last week of March do? Would this trend continue, or would it go the other way around? And it did this. It went even further under this same model. So clothing completely dived through the floor. It was over 40% year on year down as an aggregate from our panel in sales growth, 40% lower sales than that week 12 months before. Whereas home and garden shot through the roof and electricals went even higher. It is again people buying home office equipment, games consoles, things to keep you entertained whilst at home. But the thing that we thought would be extra interesting to show you guys is that yellow line, that's clothing. We thought it would be useful for you to see actually the constituent parts of what makes up clothing. So on this next slide here, we've got each week from March, week 1, 2, 3, and 4. And if you look down the bottom, you'll see the different kind of constituent parts of what makes up the overall clothing line that IMRG report. Again, down the left-hand side is the sales growth. Was it up? Was it down? At the beginning of March, it looked like this. Into week 2, into week 3, when it starts to get bad. And then as you just saw, that line that dives through the floor, this is what happened. So you've got some really, really kind of unfortunate sales reporting going on in clothing. People simply are not going out and buying new apparel items. Footwear in particular is the one that's seen the worst growth so far. People quite simply are not buying new shoes. All of this data, by the way, is coming from the IMRG dashboard, which Andy was showing you earlier. We thought it'd be handy to show you a quick screen grab. That is the latest sales results. That's week 4 for March for the online retail in the UK. That's a couple of hundred retailers data, all in there showing you exactly what's happened. And I'd like to draw your eye down to the 4th from bottom one there. Look how much garden is up year on year. A staggering 165.9% extra each for that year in comparison to 12 months before. Clearly, people have got their eye on improving their garden performance. And in interest to that, and a nice little corresponding, we've got a few screen grabs of things that we thought were quite interesting to show you. This is Waitrose Garden. This was on their website. Again, garden retailer doing really rather well. They had to stop taking orders on their website simply because they were having so many. Also, a similar situation, health and beauty has been doing really well. Boots had to go into a virtual queue. Traffic on their website was simply too much. Also, the guys at FitFlop came up with a rather novel campaign. Not that anybody needs shoes right now, but we're having a sale. I thought that was quite fun of those guys to do that. An admission perhaps to the industry is not selling shoes online particularly hotly, but nonetheless, they were trying to encourage their customers to buy. And lastly, a fun screen grab is the Virgin Wines guys. Again, the country does seem to be rather keen on getting itself stocked up with alcohol whilst we're on home isolation. It was very common for a beers, wines or spirits seller to be struggling under the loads of people shopping online. Right, that's the end of the sales update. I will hand back to Andy.
Thank you. Lewis, could you come in and give us a few pointers as to what you're seeing as well?
Yeah, sure thing. So again, hello everyone. So I'm Lewis from Emealige. First and foremost, just to echo Matthew's points earlier, these are very, very unusual times. And whilst we're in quite a unique position because we work across many different industries, we can see these shifting trends, but ultimately behind those trends, there's kind of real life stories. So we've had those difficult conversations with customers who, may be going through furlough processes. So again, just something to be aware of when we look at these trends, but there are real life stories behind. That being said, and also kind of the world in which we live in, fraud prevention and sales enablement, again, we see a big kind of spike in behaviour when we look at fraud prevention as well. So since the start of this year, we've seen around a 400% increase in fraudulent activity. And that could be anything from perhaps someone using a stolen credit card to purchase things online, all the way through more targeted and sophisticated phishing attempts, people posing as governments to retain information. So those of you who don't know anything about Emealige, so we operate a global consortium network of many global online retailers, also with airline and travel industries, along with tier 1 banking and finance customers as well. So how we help our existing e-commerce customers is typically we'd sit upon the account registration or checkout process. So when you first see that customer for the very first time, it's quite hard to understand how trustworthy is this person, particularly if they're going for quite a large checkout basket. So rather than add friction to that process, which can lead to cart abandonment, we help those retailers to leverage the behavior and intelligence behind that email address to better understand who's high and low risk. So that means we're able to expedite and improve more genuine sales, as well as helping to keep out the bad guys right at the start of the customer journey. So we're seeing some really interesting insight from IMRG and kind of what they've seen. And what we've done, we've wanted to compare and contrast what we're seeing within our global consortium network. So we have kept this EMEA based and very UK specific, because I understand that's kind of a target audience for today. So first and foremost, I just want to talk you through our travel. And again, we see quite a jumpy line, and that's due to weekend skews. But as you can see, you can pretty much pinpoint the 16th of March. That's when France went into lockdown, and kind of how that's negatively impacted that trend line there. When we look at e-commerce, typically to map that out as how IMRG do, that would be multi. So if they're selling more than just one type of item, perhaps a department store. And again, we see a slow decline, but this trend is starting from the very beginning of the year. So perhaps there's some tailwinds in January sales, which perhaps inflated that trend line initially. But we can see that slowly drifted off. And then we look at clothing as well, so that kind of purple line. And again, it kind of has that similar trend. You've got the January sales, and then we see that slow decline. What we have seen, though, quite recently in the last couple of days is a slight uptick in clothing sales. And it's quite hard to understand particularly where that's coming from. It could be a case of we're going into payday territory, so perhaps people are splashing out. Perhaps it could be the case of the initial shock of lockdown, perhaps easing up, and perhaps people are realising that they might want a new dressing gown or loungewear to be comfortable in. But additionally, when we looked at that data closely, we had some exposure to the Spanish market, which are kind of further along the journey, or the lockdown journey, than what the UK is. And perhaps we could suggest that as they become more to grips and to terms with the day-to-day, perhaps that could be a harbinger of what we expect the UK to follow. Only time will tell. But most interestingly, it's the electronics journey. And you can see that the big spike in behaviour didn't really happen until perhaps a week later. So on the 23rd, when Boris Johnson addressed the nation, and it became very real that actually, yes, pretty much everyone where possible is going to be working from home. And that's when we see that big shift and jump in the sales trends there. Most interestingly, perhaps, but the most fraudulently purchased item in electronics is the Apple AirPods. They have a great resellability as well. So it's a great little stat there. Feel free to move on to the next slide. So then we're talking around e-commerce now, and I believe there was a question around the travel industry that popped up earlier. I wanted to look into the travel industry and just to try and see if there's anything which we can learn here that may apply to the e-com industry. So again, when we look at travel, on the left-hand side, we're seeing the number of daily transactions. Again, we kind of have that jumpy line following the weekend trends. And again, we can pretty much pinpoint when the travel restrictions first started to come in around the 15th, 16th of March as well. Now, what we have here is a blend of a very, very big kind of household name and some smaller travel industries. And the reason why I wanted to present this slide particularly is to understand, are bigger e-commerce better equipped to deal with these types of storms? And when we look at the trends, and actually from a percentage in terms of revenues, it's actually the biggest guys who are going to be hit the hardest. These are the guys which have more operating costs, more overheads, and these are the ones we're probably going to see more in the headlines in the coming weeks as they move into the furlough territory as well. So again, what can e-commerce learn from this? What can they expect? Well, perhaps in the coming weeks, we're going to see more difficulties, particularly with the big boys in e-commerce as well. One thing which I would advise is typically when we talk into that furlough territory, that does mean a lot of your kind of payment staff, those that would look to investigate those checkout transactions. Unfortunately, these are also the type of people that have been put on furlough, which means that now some online platforms are having greater exposure and risk, and particularly in a time where certain individuals are becoming more desperate and we see a spike in fraudulent behaviour, that certainly is a cause of concern for a company like ours. And that's all for me.
Great, thank you, Lewis. Just a few more things I wanted to show to you, some interesting stuff that we've seen, and then we'll get around to your questions. Fire your questions in now. We've got quite a few already, but feel free to get them in. One thing I just wanted to bring in here was about Royal Mail and what they're doing. Obviously, they're the biggest carrier out there. They've had to make a few changes to what they're doing. Now, this information is available on their website. I'm just putting it in the slide deck here. We had a delivery webinar yesterday where we showed some information, and then Royal Mail actually updated yesterday their site. So I just wanted to make sure that everyone had seen this. There's a few things there that you can digest. I'll ping them around to you. But so opening times at some of their service points have changed. Just make note of that. As I say, it's on their website. You can go and see. And the retention period for keeping parcels has been extended to 30 calendar days, and a few changes around delivery guarantees, things. And also they'll leave parcels in a safe place where they've received instruction and provided the post person that thinks it's safe to do so. So as I say, that's on their website if you wanted to go and look at the latest stuff that they're doing. I think this is a word really that I think you should really bear in mind when you're considering your response to this thing, is community. I sort of mentioned it earlier. There has been this really big sort of we're in it together kind of culture that's built up around this, and I think there's going to be big winners and big losers really if you fail to grasp the sort of zeitgeist, if you like. And then you see some retailers responding to this. So this is Adidas, I think. And it's all very nice, of course, when you've got Paul Pogba, etc., on speed dial, and you can get them to come and create some content for your homepage. It's a very nice position to be in. But they're creating this idea of community on the homepage there. This, I think, is Audi. And what they've done is they've put this kind of, so this is on their homepage, and it's kind of a thank you to our amazing colleagues for all the hard work, nice pictures of them and things like that. So the thing that I was mentioning earlier about if you want to keep trading, you need to make sure that your staff, your warehouse staff and people like that are actually on board with this, you know, not people who are on massive pay packets here, and they're the ones that are having to take the risk. So if you sort of lose them, if morale is not particularly good there, then, you know, they're just going to down tools, quite frankly, and possibly go to the media. So something to really think about, that word. This is Bobby Brown. So kind of an interesting thing that they were doing, because everybody's at home, you know, let's face it. They're doing this thing where they're offering live chat with some of their pro artists. Now, no expert in this area. I don't know if those people are famous. Perhaps they are, I don't know. But, you know, if you've got the opportunity to kind of tune into some live streaming stuff that's going on, get some nice tips, you can see how that kind of audience could be very engaged with that. So just like Adidas with their pool of people that they can go to, you know, what can you do to try and keep your audience engaged and go a bit further for them? And then we mentioned that a few have suspended their online operations, you know, temporarily. A lot of them. There are those that have done it and then they've kind of come back. Now, River Island is a notable one here. So they are saying that they're basically closing their distribution centre. It's not 100% clear to me whether that means it's going to be closed and they won't trade online, because they say at the bottom, we are still taking online orders. It's just going to take ages to get to you. And I wonder if that approach is something that that might be quite a good one. Dunelm here as well. So they actually suspended, they closed their online operation for a few days, and then they came back and said, actually, you know, we've worked with our suppliers and we reckon that we can do it in a nice, safe way and everything. So they're doing it. They're just doing it really slowly. And that could be something that I think maybe is a smart message to put out, that, you know, we're not just going to keep our warehouse really busy, because that's not a great situation for our staff. But we're going to just do it slowly. We're going to things are going to be really, really slow, but we're going to make sure that everyone is protected and safe. And that might keep your morale up with your staff, might make them feel safe, and it enables you to keep going. And it's a good message for your audience, etc. So something perhaps to think about how you might be able to interpret that into your own business. So we're just going to get to the questions in just a second. I just want to show you a few things we've got coming up. Avalara have given us a bit of information. So Making Tax Digital, this thing where it was going, it was supposed to be coming in on the 1st of April 2020, so yesterday, and they actually suspended it by a year. So if this is, well, it's very important for the run of a business, obviously. So they've got some insight on that. Go to their website. You can go and read all about that. Some other stuff that we've got coming up next week, as ever, Thursday, 2 o'clock, we'll have our latest sales update, so 9th of April, 2 o'clock, tune in for that. We also have Delivery Week, which was going to be Delivery Summit, but obviously we can't run a physical event at the moment. It's supposed to be on the 20th of May, so we've converted it into 5 webinars across week commencing the 18th of May, 1 hour a day. You can go and look at the content that we've got on that on our website. And what we're going to be looking at really is what this sort of means for the future of delivery. What do we need to change now, now that this thing's happened? Which brings us to questions. We've got quite a lot of questions, so you can keep firing them in should you want to. We'll start picking up a few of them now. So the first one is looking at whether we have any ideas on the sort of trend of ups and downs that we've got. So in China, for example, they have managed to, in Wuhan, they have managed to sort of get back to people going outside and stuff like that. And what do we think is going to happen with that? I mean, Andy, it's just incredibly complicated. Yeah. Yep.
Yeah, Andy, sorry, I'll come in. It's Matt Ferno with Loqate. So we have operations in China, as I'm sure others do on this webinar. So whilst government data, I think probably everyone looks at with a reasonable degree of healthy skepticism. We're talking to our teams on the ground in Beijing and Shanghai and getting a sense of how long things are taking to get back to some semblance of normal. So I think from the China question, I think that probably represents, how long did these cycles take to start recovering? And we're seeing that our teams are back in the office, our teams that work on client sites are back in with their clients in the most part. And whilst there's still limited travel from city to city, and it probably isn't normal as it was 3 months ago, there is a degree of normal trading resuming in the e-commerce space within mainland China. I think just a comment on the ups and downs. I think what we've seen from the data from IMRG, our data, what we saw from Emealige as well, is that the ups and downs seem to be tracking the legislation which is forcing behaviour, but also the choices that we can still make. So when consumers are at home, we're doing certain things. When we have to do a certain thing or we're denied some other form of behaviour, it's absolutely impacting what we can and can't consume. So I suspect that that's going to be the best way of judging the ups and downs is what we're being denied or allowed to do. But I think the China example is one that 3 months in to their experience, there is a degree of normality returning in that market.
Okay, got another question here about online grocery. So what do we think is going to happen in the future with online grocery? Hasn't really been a massive area because the capacity to actually deliver the stuff has not really been there to cover the whole sort of UK. And if you're someone who does that, who shops online for grocery, you'll know that getting your slot can actually be a little bit tough if you don't do it quite far in advance. What happens now, of course, is a pretty difficult one to say. Is it going to be people's behaviour massively change towards buying online now that they've perhaps done it and they hadn't done it before? Is their behaviour now going to change? It's quite a difficult one for the supermarkets to call that, because they would then have to put quite a lot of investment in supporting that if people just then go back to shopping in the supermarket. So tricky one for them to do, but I think it could be one where it sort of kicks in rather a lot. To a question about on where we're looking for delivery notifications and returns policies and things. So where are we looking for that information? Do we get it off the homepage or do we get it at checkouts and things? What we're doing is we're looking on the homepage for some kind of message. So if someone has changed their returns policy, you can be pretty damn sure that they're going to have some notification on the website that says that. In most cases, it's in the sort of the coronavirus update kind of thing, and it will say, we're slowing, our deliveries are slower, or we're extending our returns, or whatever. So that's kind of where we're getting all that stuff from. Why do we think that some retailers have decided to pull the plug on online operations when others are still trading in a safe way? It's very difficult to say, to get a real answer on this, because obviously what goes on internally at those companies is not something that they're massively keen to publish in the public domain. I do get the impression, though, that a lot of that pressure comes from the staff. So some of them will say that because they're a sort of family-run business or whatever, we think that it's consistent with our proposition that we should close and make sure that all our staff are protected and things like that. So some of them do it because it's kind of in line with how they market themselves. But I do get the feeling with a few of them that it's that sort of pressure from the warehouse where their staff have kind of said, we're not really going to do that. Do we know what the most purchased categories products are in health and beauty? Do we have any particular insight on that? Anyone on there have any insight on that? I think the answer there is no.
We've got information around. We do collect data on hair care and skin care and fragrances and kind of health-related products. But it's for reasons that are far too long to go into here. It's a little harder to actually pull it out in a nice digestible format. So nearly, but sorry, not quite.
Are we able to add in use of lottery and gambling and things like that to see if it's useful, see if the wallet share is shifting away from other things? So what we do is we just do, so IMRG, I mean, we just do retail. That's the only one that we do. We had a travel. We did do travel as well, but basically coronavirus, I think, might have put paid to the travel side of our index, because those people are just not having a very good time at the moment at all. I don't know if do either of Lewis or Matt, do you cover other categories outside retail?
Yeah, so I can talk a little bit around. Sorry, it's Lewis at Emealige here. So we work with some gambling companies. It's been a particularly interesting time. I'm sure you're all aware, but major sports events such as the World Cup, the Premier League, and also the Olympic Games have all been postponed. So those kind of online sports books or gambling websites, they're all kind of expecting a cool down from their figures this year as well. So they're kind of expecting some stormier times to come ahead. That being said, those that purely operate just an online casino, so they don't have any exposure to sports books, so sporting events don't really apply to them, they've actually seen a slight increase. Perhaps it could be a case of people being bored at home, but they've seen a slight uptick in sign-ups. Not sure if Matthew wants to add anything on that as well.
Yeah, it's Matt from Loqate. I think we've been fairly violent agreement with Lewis's comments for the reasons given. I think one area that we've seen really firing ahead is the Bitcoin exchanges, actually, whether it's been a flight to buy or to sell. There's been an awful lot of traffic around Bitcoin exchanges to get registered to participate in the movement up and down within Bitcoin. And say Lewis talks about gaming. We've seen quite a big uptick in registrations for financial services, so for credit card applications, again outside of retail. So whilst I think we're always reluctant to try and spin any of this as being a good news story, because in aggregate it obviously isn't, but there are interesting ups as well as the obvious significant downs, which seem to be reflecting consumer behavior within these changed times. Lewis made a comment in his presentation, I'll just echo it, that actually over the last 3-4 days we have seen an uptick in fast fashion purchasing. I don't know where people are going to wear that, maybe that's not my field, but where we saw that very significant downturn in online fashion purchasing, literally over the last 2 or 3 days we've seen an uptick in online purchase of fashion. So it feels an unpredictable place to be commentating on.
Just another question here about salaries for staff, actually. So supermarkets have increased salaries for their staff. There's a few prominent ones done that. So is there any information we've got on companies doing the same for their warehouse staff? So we don't really have anything on that specifically, but I think it kind of goes to the point about doing something extra for those people. It's the sort of morale point, if you like. So I think if you just did it in isolation and you said, we're going to pay you a bit more because you're kind of at greater risk. If you just kind of couch it in those terms, I don't think it's going to quite do it for them, really. I think if you are to offer them some kind of financial uplift to recognise the situation they're in, but you also went above and beyond to ensure that they feel that they're being protected and they're valued and all that sort of stuff. I think there's a bigger package that goes with it rather than just the kind of pay. Do we think retailers that temporarily cease trading will review do we think retailers pause up online operations will see any long-term impact when the current climate has improved? It's a really, really difficult question, that one. I think at the moment, as I sort of mentioned a few times on here, there is this sort of community kind of spirit at the moment, and I think we'll all sail towards one side and say this one's great, and then kind of pillar the other ones who are perhaps not, the baddies that come out of it, if you like, and who there's been a few examples of those already. In the longer term, though, it's very difficult to say because that spirit will go. I think once this is all sorted out, there might be some lingering elements of it, but will people, if you're not available and other people are, and they go and shop with those retailers, and then they, their behaviour just starts to become, oh, actually, that was a pretty good experience, I'll just go with them. How are you going to win them back when you come back online? That kind of, we did the right thing. We stopped and protected our staff and things. How far will that go in, let's say, 6 months' time or something, when people are into their sort of usual spending behaviour and things like that? It's a difficult one to say, really. If we're on lockdown for the foreseeable future, do you think current buying trends will stay the same or change dramatically? So what we've kind of seen over the past few weeks is the demand has been incredibly lopsided, and people have, because we are all in the same situation, you get these massive lurches because everyone's at home. They suddenly think, I've got to buy a monitor, or, I've got to buy some craft stuff for their kids to mess about with because we're stuck in the house. There will be other massive lurches, I'm sure. I don't think clothing's going to fall through the floor forever. When it comes back, I think it will come back with a bang at some point, and it will be triggered by something, whether it's a celebrity or whatever, wearing some clothes or whatever, and then that becomes a sort of meme that everyone kind of goes along with. It's very difficult to see where that stuff will pop up and not kind of when that stuff will pop up. But if you're not kind of in it at that point, then it's going to be a bit of a tricky one. I think you could really sort of lose out there.
Andy, it's Matt from Loqate. I think there is an argument that I think for those consumers who are able to continue to have some sort of income, whether it's kind of government supported or stimulus income, or their employers keep them in employment and paid, all of us are having far less things to spend our money on in a lot of cases. So I think we see that potentially when we come out of this into whatever the world looks like after this, there could be a significant spike in consumer behaviour back to either the things that they were spending on before, or we might be surprised and that there may be new areas of spend. But I think it goes back to the point that we probably all made, is that retailers need to be ready for what happens when we get through this period of significant close. And I don't think we're going to see any backwards movement in digital online activity for retailers that were a hybrid of high street and online. I think they're going to see their operations in the high street probably not recover to the extent that they enjoyed before. And if they're ready to take a far bigger step into the digital and they're able to manage customer deliveries in a way which is competitive, then they're going to have an edge. So I think it's being ready for what the new world looks like. But I think it's going to be, I think at Loqate, we absolutely see it's going to be significantly more digital than it was before.
Just one about the garden furniture. So there's been quite a spike in demand, as you saw, 168% up or something over the last week. Do we think that's going to continue, or are we getting a big spike earlier and sales will drop off later in summer? So there's a bit of precedent for this. If you look at 2018, garden sales were really, really strong between sort of April, May, June, I think, which was when we had that massive heat wave that went on for ages. So there was a massive spike in garden sales then, and then it obviously dropped off a bit later in the year. And then 2019 wasn't terribly good for garden, but if you remember, we actually had quite a hot February last year. I think we had 15 degrees in February. You could kind of go outside without a jacket on and stuff. So garden did respond to that. So as a category, garden is almost the most susceptible to changes in weather patterns. So it just depends what happens for the rest of the year. Incidentally, this Sunday, they're saying that we might get 20 degrees. So I think that might be National Barbecue Day. If you think about how many people are indoors, I think it's going to be a pretty big one, that one. Just having a look at some others. Overseas markets, do we got any? We don't track sales in other markets. I don't know if the other Lewis, Matt, do you have any view on what's going on in other markets, online retail sale wise? Is that something you got any data on or not?
Yeah, we do. I'd say at the outset. So we're typically in obviously the UK, Central Europe, and North America, plus parts of Asia. So as I mentioned earlier on, we've seen something resembling a recovery in the Chinese market, and we see that in one or two other markets in Asia that haven't been quite as hard hit by COVID-19. The model in the US looks a little different, on the basis that different states have responded differently to the crisis, and with some in lockdown and some not. So yeah, there is a mixed picture. I think Lewis mentioned about the Spanish precursor earlier on, and we'd echo that. So clearly things are not all moving at the same pace, and the exposure to digital in different markets is obviously creating an uneven picture globally. But clearly, if we just purely take the Chinese example, we can see a 3-month timeline that began in full lockdown and nothing happening, and 3 months later, a reasonable degree of renewed economic activity. So if that proves to be true in other markets, then we've got a bit more hope for optimism.
All right, thanks very much for all your questions today. I'm sorry if you asked a question we didn't get time to get around to you. These are very popular webinars, these ones, and we get inundated with questions, I'm afraid, which is great. But I just wanted to thank you all for joining us today. There's our contact details should you want to follow up with us. Tune in again same time next week. Thank you for joining.